right now we're going to analyze Cleveland Cliff. Oh, I see a lot of people just joined the stream. Let me go to the no, here to the page so we can see it. All right, well, those that just joined the stream, welcome. We're going to be analyzing these 5 stocks, so let's go and do it right away. So Cleveland Cliff. Let's see this company. Cleveland Cliff, it's in the basic materials. We've been liking basic materials a lot. Most of the companies have been from this sector. Again, every day we've seen one of basic materials. It does seems to be a sector that at the moment it's not valued, not overvalued, so it's very well valued for that matters. A lot of opportunities on it. Okay, industry is steel. Let's check the graph. Let's see how long they've been in the market. Wow, 1969. That's a long time. So remember, as always. Oh, my camera is blocking the logarithmic scale. Someone mentioned this before. Let me just put it here. I think that's gonna do it. Sorry for that. Let me just see that. Yeah, there you go. So remember that in any graph that has a long history, we need to see it in a logarithmic scale, because we will believe that this proportion-wise it never happened before, and most likely it did, or in a similar way. So once we have it in a logarithmic scale, we see that those jumps that we see in an arithmetic way are not as big. Now, this company seems to have been done quite good in the crisis of 1973, when the U.S. divided, unpegged from the gold. They did quite good in the 2000s as well. I don't see that to be like we've seen companies in the 2000s that were dropping 90%, such as Amazon, for example. Well, Amazon did 92%, and 70% is very, very, very reasonable. In the 2000, it dropped. How much did it drop in the 2000s? We go from peak to bottom real quick. 88%. Still, company that dropped so much. I think this is the first one that had been dropping above 88% during 2008. I don't remember the other ones. Chat, if you remember, let me know. But I believe none of those did it. And then, well, in COVID, they also did this V shape that everyone has, this little bump that everyone has at the moment. And something happened with them from 2003 to 2017. We can see that in the SEC filing. Let's see if we have time for it. But so far, I don't like it too much. There's not much of a productivity line. They had like some weird stuff going on here, and then they just corrected. We could study it. I don't know how worth it that is, because the management most likely is not the same as right now. Remember, companies and management are two different things. But yeah, as a productivity line, I don't like it. Let's go for the company itself. US, obviously, New York Exchange, finally won in the New York Exchange. 18% return on assets, that's really good. PE of 2.58, that is really good. Dividend yield, 0, that is also really good. Remember that it's up to 2% in this industry. Market cap of 8 billion, it's reasonable. And employees of 26,000. Let's continue. Let's open here the webpage. We're gonna see it in a little bit. And let's go to the balance sheet. Remember, if you don't know what a ROA is or a PE, or you have any question, you can ask me in chat. I've been saying what they are in every day of the stream, so the closer we get to Friday, the less that I explain. The more that we are in Monday or Tuesday, the more that I explain those concepts. That's it. As you can see, now we have this rolls down with us, so we're very happy. We can actually have the years now going down. There you go. So assets. The assets are in 3.5 billion, 16 billion, 18 billion. They increased a lot. Percentage-wise, well, this is obviously like 5 times more from 2019 to 20, which is really weird, because in COVID, it still did good, but they didn't do 5 times good. As for 2020 to 2021, it's like about 20% or so. Very, very good as well. Let's see the liabilities. I don't know why this, we usually are able to see both at the same time. Well, doesn't matter. The liabilities are in 3.1 billion. I'm gonna make this closer, because if not, you cannot see it. Thank you for telling me that. There you go. The liabilities are in 3.1 billion in 2019, 14 billion and 13 billion. They actually decrease a little bit. 13 and 18. Well, it's right on the middle, right? It's like very close to the. It's almost 1.5, but it doesn't get to 1.5. So as for liquidity, we're not too happy. And well, obviously the equity is gonna be in positive, also increasing, very nice. So far the balance sheet had been good. As for the revenue, we have about like 2.5 times more, including COVID, and then 4 times more. Wow, what did this company do? It's very weird though, because in the graph it doesn't seem like the market reacted in that positive way. Let's see the revenue though. I mean the net income. Maybe the net income is actually pretty low. There you go. Yeah, so in COVID, almost every company had, or in 2020, almost every company had a negative net income. So it's understandable. Nevertheless, as for this year, they increased tremendously. $3 billion in net income, something they've never achieved before. So yeah, I hope they have positive cash flow. If not, I'm gonna get mad at this company. Let's open the SEC filings as well, so we'll see them in a little bit. Now let's go for the cash flow statement. In the cash flow statement, there we go. In the cash flow statement, what we want to see is that the net cash provided by operating activities. Remember, that's the cash flow that you generated from your normal business. Now, usually we want it in positive. This is a really bad sign that is in negative. This is close to 0. That is why it's a line in our software. That's something I don't like to see. It's normal that in COVID it was negative, but it is not normal that with the revenue that they had a revenue of, of 3 billion. They were not even able to generate a positive cash flow. That's a big red flag for this company. They invest in as well. It's in negative. It's understandable. It's always in. It should be in negative for investing activities. If not, it means that they actually sold instead of acquiring. We don't want to see that. And for financing, it's in positive. That's bad. That's bad. We don't like to see financing activities in positive either, because usually what you like to see on the financial activities is that, for example, they are repaying debt. So the cash flow actually has to go out of the company. Or, for example, they are repurchasing stocks. So they're actually paying for those stocks that they're buying. But when you see it like this, it means that they're actually using the financial activities to get money and either dilute or obtain more debt. So not nice. And because it says the other financial activities, we might be able to see it in the SECs. In the SEC, we're gonna try to find it out. So yeah. It was expected. It was going to be in negative, though. The cash flow is in negative. Very bad. This is a company, even though it's in the sector that we like a lot, it is not a company that is worth even keep looking at. 3Xs, in our ponderation. They do have enough time. They do have enough revenue. Their cash flow was horrible, and they didn't make the 1.5 liquidity that we like for the assets and liabilities. Even though the ROA and the PE are exactly where we want them, this company doesn't give me a good feeling. CLF doesn't seem. Let's see where is the investors part. Here it is. As always, remember what you want to see on a web page is the investors area. Oh wow, look at that. They just had the quarterly results. Many companies have them in July, by the way. That's another reason why the market is going up so much this week. Because most of the companies actually did very well when you compare second quarter of 2022 with second quarter of 2021 or the second quarter of 2020. So obviously this quarter is a little bit biased because the whole world was in a crisis in 2020 and then it was still recovering depending on the sector in 2021. So then the Q2 of 2022 is going to be just out of proportion. But very good. We have it. Very nice. We have the information if you want to check it out. So we're going to close this. And we're going to go for our SEC. Now, remember the 10Ks are the forms that they have to give every year that includes their financial information. Someone asked me, by the way, about like 3 days ago, we had a company that said Form 10K/A. And it asked me why it has a /A. And the reason is that that's an amendment. Oh, I hate this word. Amendment. And basically, they had to correct something. And you don't like to see a 10K with an amendment. Because if it's a small thing, it's not even gonna be like in an amendment. You see it before. Like there's a lot of processes that go in order to actually file the 10K. But when there is an amendment, it was a serious problem that had to be amendment. This word is so tough. So that's why it's a 10K. That's the difference. It was a 10K that got corrected. Now on the SEC, remember what we want to see is the outstanding shares. We hope that they were not diluting us, and they dilute our investments when they issue more shares. So here we can see it is at 271 million as for February 2020. 271 million. Fwah. This is insane. I don't know if you can like see. I'm gonna like zoom a lot on it so you can see actually this number now. 498 million, from 270 to 500,000 to 500 million, almost 100%. This company diluted the investors by almost half of their percentage. This is the same as if you would have a company that only has 100 shares and you have one of those 100 shares. So you have 1% of the company. But then the next year, or well, during that year, until the next year, the company issue another 100. So now there are 200 stocks in the market, but you still only have one. So now you have 0.5% of the ownership of the company. That's exactly what happened to those that were owning this company from 2020 to 2021. Very, very, very bad. Very bad. Now let's see. I hope that this is less than 498. They kept doing it. They kept. Wow. So I mean, it's. I think you've realized whenever we're analyzing the stocks that before getting to the SEC filing, because we already see all the numbers and we see the ponderation of the Black Swan Index, we're able to know that the company is not going to be that worthy. And when we get to the SEC filing in the abstract, we just confirm it. And there's nothing to be done. I would not recommend to even look at this company in the short term, at least. So if you are a Cleveland Cliff investor, I'm so sorry. I believe your company at the moment might not be the best. So sorry for that. We give the thumb down to Cleveland and Cliff. Chat, remember you can ask me anything you want. If you want to see a company, if you have any questions. Of course, many of the concepts we've been repeating them every week and every day. But if there is a concept that you still want to know, you can obviously ask in chat. Now let's see another company before we go to the break. So it's going to be Arch Resources. That's the first energy company that we see, right? Yeah, we haven't seen any energy company. So let's check them out. Let's see what they do. So Arch. I think they're gonna be like very small time. Yeah, 2017, huh? Okay, so they haven't been too long in the market. Logarithmic is not gonna affect too much, I guess. Well, it actually did though. Most of the company, is this one oil or not? Let me see if it's oil or not real quick. It has mines. Oh, it's a lot of coal. Okay, so it's in the energy, but it's in coal. Very good. Nevertheless, coal also got affected. So coal and gas and petrol, they got affected quite badly during COVID. If you remember, even the futures of oil went down to minus 34, if I'm not mistaken. If you don't know how a future goes down, we can explain it later. But that's how bad it was. The asset became negative. But what happens with most of these companies is that then they recover quite quickly and quite well. So if you bought any company, almost any energy company during July, August, and September, you would most likely right now be at least in 80% or 90% or 100%. But that doesn't mean that it's going to continue, but most likely it's going to stabilize. So just saying that for the energy. Now, let's check the webpage. We're going to open it. They're in the energy sector. Thermal coal. I should have read that before this. They're in the US, New York Exchange as well. 31%, that's high. 4 PE, that's low. 6%, that's very normal. Now, remember each sector has a different dividend yield. We've said this also a few times. For the dividend yield in the energy sector, you're usually looking between 4 to 7%. Companies that have less than 4% is very weird. It's not common. 4 to 7 it is. And the reason is because energy companies usually very well established, and they're what they're called cash cows. So a cash cow is basically just like a cow that is there and then you can just milk it. That's basically, I didn't invent this terminology. This is a terminology in the industry. But basically it's just already there. All you have to go is get some milk, in this case money, and just go out. It's companies that usually are very, very stable, except for the COVID crisis, and therefore they can give a high dividend. And 4 to 7% is a high dividend. So 6.33 is right in the spot, right where we want it. Market cap of 2 billion, that's very small for an energy company. Usually they have at least 10 or even into 100. ExxonMobil, I think it's like close to 300 billion if I'm not mistaken. And the employees are 3,300. So all right, let's check it. I'm excited because it's the first energy company that we have. So let's see here. As for the assets and liabilities, it decreased obviously in 2020. I don't expect any energy company that respects itself to increase their assets in 2020. And they actually did quite well. This is like a 30%. Is it? Yeah, it's kind of like a 30% increase. So very, very good. Very good to see that. But let's say if it was because they got in debt. So we have 1.7 and 2.1. And all right, the assets had stayed very, very stable. As we can see, it's wow, that was like a huge drop here. I want to know what happened between 2015 and 16. This is very, 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 very interesting. But as for the last 3 years, which is usually what we look at, they've been like very, very stable. Nevertheless, they don't have enough assets to cover the 1.5. I believe, or right on the point, this would be 700. It would be 2.13. And this is 2.117, so they're lacking like $20 million to for the 1.5 liquidity. But we can accept it. We can accept it. We'll say it's liquid. Equity is going to be obviously positive, so there's no issue with that. Now the income statement, completely understandable. 2020 they had a massive gap in revenue. Most likely they're gonna have a negative income. Nevertheless, 2.2 billion in 2021 seems to be stable throughout the years. You see, it's an energy company. They're very, very stable. They shouldn't move too much in their numbers. If they're already very well established, of course, if they're new, they will. And as for net income, yeah, it was in negative as expected. No, nothing new there. And also 200 million, 300 million, 200 million, negative, 300 million, very, very stable. Nothing out of the ordinary. Let's open the filings as well. Cash flow statement, we'll see it. During the cash flow statement, we have that the net cash by operating activities went up quite a lot. Well, in comparison to 2020, but actually quite low. It decreased a lot though. Now that I actually see it, in 5 years, it went to like not 50% of it, but like maybe 60%. That's strange. That's strange. That's not normal. Usually shouldn't decrease that much even after COVID. For the investing activities, obviously everything in negative. There's no problem. Most likely they just were paying a bunch of acquisitions. Yeah. Oh no. Whoa. They had to sell. Okay. So look at this. This is we haven't seen this before. I think during this week, it is in positive. The net acquisition is actually in positive because instead of acquiring something, they sold it. So let's imagine that they had a refinery. I'm just giving an example, right? We haven't gone into the SEC filing. I don't know what it was, but let's imagine it was a refinery or part of it. What they did was actually sell it to another company, and that's why that one was the one that acquired that refinery, and that's why it's in positive because they actually got money from it. And that's the reason why we don't want to see the investing or financial activities in positive, because usually if they're in positive, it's because they're giving assets away. That is not cash. You want them to give cash away so they can get other assets in exchange for it. But you don't want them to see their assets being the ones that are going out in order for cash. At least not on the cash flow for investing and for financing. You do want to see that on the operating activities as much as possible. So very, very good. Investing activities, it's in negative. Nothing new. They were paying debt. They couldn't repurchase. That's something I don't like. But nevertheless, it's pretty good. Well, that was the investing ones. Financial activities is in positive actually. Here, other financial activities, they're doing this quite a lot. They really want us to get in the SEC filings. We're not gonna have time to do that, but this is massive. This is something we would like to see. Not happy, not happy. It's gonna have negative, yeah, I guess so. Negative cash flow. A company in the oil industry, I mean, well, thermal coal for this one, but in the energy sector that has a negative cash flow, big flag, big flag. There's nothing to say. How are you gonna pay your dividends? Where is it? Where did it go? Oh, what happened here? Why did this move? Okay, there you go. They have minus an amount. It doesn't matter what it is. There's a minus. They're in negative. It's impossible. Even though it's only minus 8 million, they don't have even to pay the dividends. How are you going to invest in a company on the oil, well, on the thermal coal industry that is not even able to pay your dividends? Obviously, they had to sell something, and even though they sold part of their business, as we saw, where did we see it? As we saw here, it was not enough. It was even not enough just to pay those dividends. Most likely than not, these dividends are going to go down, or this company will have to dilute itself more, or the prices will just go down until they can repurchase their own stocks. So big flag, not happy. So as we said, the 1.5, they didn't do it by a very little bit, and the positive cash flow, there's no positive cash flow, so there's nothing to do there. Yeah, and the rest, even though the ponderation gave us that is correct, this is something we said many times. Our black swan ponderation, even though it's usually right on the spot, it is a guidance and not set on the stone. Let's check their webpage, Investor Center. Obviously, we've done this many times. They have the SEC filings. That's what we like. But let's go and see them ourselves. So we have the three of them. Oh, they changed the logo. So let's see the abstract and outstanding share. You should know the drill of what you have to do in every company that you're going to invest if you want to. January 2020, 15 million stocks. Oh my God, they made this so small. Oh, here it is. And then January 2021 is still 15 million. I know some of you might not be able to see it too much in the computer. If you're in the phone, you can just like scroll up, like zoom up, and you're going to be able to get it. In the computer, I think it's a little bit harder, but it's still 15 million. And this year in January 2022 is still 15 million. At least they didn't dilute anyone though. But they're not going to be able to pay those dividends. That's tough. Anyone that right now holds this company should know that. If we see the prices, it's just in the last 3 months, it should go down. Yeah. This is very, very understandable that it's going down. I don't even understand how it went up a little bit. This is a company that just makes no sense to invest on. Let me see in 6 months. This is what I don't like about technical analysis, that anyone that would just see technical analysis, they'll be like, oh, look, this is such a support, you know, look at this resistance here, and there's a support that got tested 3 times. Therefore, none of that, guys. Please, don't do it. Don't do it. If you want to gamble, please do so. But if you're serious in investing, don't do that. Check for the fundamentals, and only if then you want to do some technical, do it. But please don't use technical as your main source of information. I beg you. This company also gets the no. I'm quite sad because it's the first energy company that we see during this week, and it got also a thumbs down. Well, it happens. Any question, chat? Any question for someone? Any questions right now? Nope. If there are no questions at the moment, what we will do is go and take a small break of about 3 minutes, a coffee break, and then we just continue.